Good morning, everybody. Hope the week is treating you extremely well. We've had some resistance starting to play out here in the indexes over the last few sessions. We'll certainly jump into that. But before we get into that, I would like to take some time to talk about something we haven't spoke much about in these videos thus far, and that's market breadth. Market breadth is a way to gauge the overall health of the market by taking a look at the number of companies that are advancing relative to those that are declining. So more advancers than decliners, then that means breadth, and that means the overall market is typically moving higher. On the flip side, if only a few companies are pushing to the upside and a lot are pushing to the downside, but the indexes are still holding on, that can be a kind of sign of the markets getting tired and of a topping pattern. So one of the things that we take a look at is the Mcclelland Summation Index. And this is gauging breadth by looking at advancers versus decliners of whatever index we're taking a look at. When we take a look here on the screen, as we have some information on the S&P Summation Index, and it's near a 20-year high. And we can go back and we can look at every time that the Summation Index has been that high, and essentially saying excessive optimism is almost all names in the space have been pushing to the upside versus declining, and that has really loaded us on one side of the boat. And typically when that happens, we tend to see some sort of a pullback. In the short term, it doesn't mean much for the mid or the long-term health of the overall market. And so when we look at the numbers here, a week later after this reading, which by the way this came out on last Friday, the market's down an average of a tenth of a percent. 2 weeks later, 1.5%, almost a month later, a little more than 1.5%. And then you'll notice 6 months later and 1 year later, actually the market typically tends to be up a higher percentage of the time. Now, using these to take a look at extremes can certainly be a valuable thing, but the way I like to use the Summation Index is actually to take a look at the Nasdaq Mcclelland Summation Index and pay attention to a moving average of 4. And that is the difference between these two lines that are on the chart. And what I'm looking for is I'm looking for crossovers to give me an idea of when a trend might be changing, i.e. breadth might be changing. And that typically does a very good job of picking short-term highs and lows. And if you go back and take a look at how this has played out over the last year, right here, when we get a crossover, you can see that the Nasdaq fell. And then when we get the crossover the other direction, it rose. Then when we get the crossover the other direction, it fell. Then when we get the crossover the other direction, it rises. Okay, and then we get our crossover here, it falls, and so on and so forth, right? And this really did a good job of forecasting the October sell-off all the way into the bounce that we had, and then that sharp sell-off in December. And since that bottom that was put in December, we have had a positive signal on the NASI until this week. So in the beginning of this year, the markets essentially have just gone straight up. But if we take a look at the breadth readings, the Nasdaq Mcclelland Summation Index here, I had a positive signal, and that has been in place until this week. And that is very important because we keep talking about these resistance zones, right? We've had an incredible rally, and if we go back and we look at the last video that we put out, we talked about this 2820 level being extremely important on the S&P 500, and to pay attention to us with that reading of RSI 70 and then it falling back below 70, we could end up with this being the zone in which we stall. And so when I take a look at the Nasdaq Mcclelland Summation Index topping out here, I take a look at what looks to be that resistance holding there on the S&P 500. That same zone that we talked about here on the Nasdaq is acting as resistance. We take a look in at the Russell 2000. We're going to talk a little bit more about that here in just a minute. But once again, there's that resistance zone. And then we take a look at the Dow Jones. Once again, we see that that resistance zone subsequently is playing out at the moment. Now, does that mean we are going to head straight back down to the bottom? Absolutely not. That's not what I'm saying here. This is just that zone where it makes sense for us to stall and pull back a little bit from before either attempting to make that breakout, or we could ultimately, continue to head lower. If you're looking at this as a short-term potential top, the areas of importance in terms of pullbacks, 245 on the Dow. We take a look at the Nasdaq here in the same way with the fibs. I would be looking at 6,700 as that next key level of support. The S&P 500. We take a look at this the same way. If we're just going to get our typical 38.2 fib retrace, look at 2630 as that zone, and then on the Russell. We would be looking in here at about that 1470 zone. Now that I have the Russell up on the screen, let's talk about the Russell versus the rest of the indexes yesterday. The Russell was down over 2%, and we take a look at the S&P 500. You know, not the greatest looking candle in the world here, but it was only like a sixth of a tenth of a percent. You know, the rest of the indexes were all not down even a percent, and you had the Russell 2000 clearly breaking below that 10, that 20, now that 10's curled down. That's not something we have. We're above the 20 on the S&P. We take a look at the Nasdaq. We're above the 10 and the 20, and we take a look at the Dow. We're sitting right there on that 20. The Russell clearly, on a percentage basis, had led us higher this year. It also led us to the downside last year, way underperforming the rest of the indexes, right? And this is something that makes sense when we think about it, right? Higher risky assets, if the market is selling off and in a risk-off environment, those are going to perform worse. And when the market's willing to take on more risk, those will typically tend to see those big thrusts to the upside, and you can get some outperformance on the upside. Right, that is the nature of riskier asset classes. Now, the concern, of course, being the day yesterday was so ugly on the Russell 2000, down over 2%, dramatically more than the rest of the indexes, and it had been a leader to the downside last year, and it was a leader so far to the upside this year. Is this saying that this zone, for now, is clearly done for, and we are headed back lower? That's the thought process here. I mean, we're back under 50 RSI after that higher reading there on the Russell. So we're going to want to continue to pay very close attention to what those mid and those small caps are doing here over the next week, right? If this continues to sell, that could be that nefarious sign that you know, we are likely to make that larger retrace. And if this does hold up here, buyers do step in. This may have just been, you know, a crack, so to speak, but nothing too bad to come from. Now, last but not least, we'll take a look at the emerging markets here. All right. This is the chart. We have not changed this since the last time that we took a look at it, right? We have our downtrend line that is broken out. We've grinded higher, major level of resistance above, and it's kind of stuck in this zone here over the last couple of weeks. Yesterday's action wasn't concerning, you know, versus the selling that we saw on some of the U.S. indexes, especially the Russell. So this is another area where I pay attention to in a higher risky class of investments. And I don't see the cracks forming there. So to sum everything up here from today, we're really paying attention to those breadth readings. We got really stretched to the upside, and that's no surprise when we take a look at the S&P 500 here this year. You know, just a V straight rally to the upside. Breadth readings kind of out of control, should lead to a short-term pullback. That's what those numbers are showing us. And then we have the Nasdaq Mcclelland index kind of showing that crossover, that potential topping pattern here earlier this week. And then, of course, the Russell's action yesterday. All of those things, when we put them in together, for now, it looks like this resistance zone is going to continue to stay as that resistance zone. So hope you guys found this information interesting and helpful. As always, I'll see you guys next week. Take care.